Hello and welcome to Martin Lucas Investor. My name is Sensei, and let's give you the rundown for today. We are getting ready for a big day. We've got Coca-Cola earnings coming up straight after this, but Nvidia, chips, AI bubble, is it all coming to an end? So let's get on with the video. We're going to start off, with the live stream. If you're watching this later as a video, do let me know in the comment section below. Let's start off with the market watch. Then we're going to go over to our top stories of the day. We're going to look at what's coming up this week: FOMC, the Fed, the UK interest rate decision, the Japanese interest rate decisions, the biggest companies' earnings, all of that coming up this week. Then we're going to come on to our deep dive with Nvidia looping. The famous loop is back again. OpenAI finance agreement, the AI crash that could have already started, a quick Q&A, and then we'll go over to Martin for his Coca-Cola earnings live stream. So thank you everyone for tuning in. This is going to be a very short show. We're going over to Martin in about half an hour's time. So let's get on with the show. As always, let's start off with our market watch. Just a quick look at the market. So what is going on in the markets? The FTSE 100 up slightly on the day. That's the only thing up on the watch list, on the main watch list today, which is very surprising. You normally get a few things up, but it's just the FTSE up 0.35%. The S&P 500 down just a little bit. Bitcoin down 0.4%. Bond market down 0.5%. Oil down 0.62%. And you see why it's a bit strange, because normally if oil's down, stocks are up. Normally if bonds are down, stocks are up. Both of bonds and oil is down, but stocks are still down. Ethereum down 0.84%. The Nasdaq down about 1%. Gold down 1.3%. XRP down 1.3% as well, exactly the same as gold. And silver down nearly 2% on the day. So that's our market watch. Let me see why that didn't highlight. We'll highlight it as we go through. A quick look at our top stories as well. We want to come on to our Nvidia story in just a few moments' time. Our top stories of the day, we can scroll up to our morning forecast newsletter. If you don't have this, you can get this for free. First link in the description. If you want the full daily newsletter with the Nvidia deep dives and the charts of the day and all the other things you get as a premium member, you can get 25% off from your first link in the description. You don't even know the terms of the deal, says we've already got a couple funny comments. Oh, it's just one person. Jess Constant. We'll go through it. Just give us a moment. We're not even on the Nvidia story yet, so you'll see what it's all about in just a second. There's top stories today. Asian market. I mean, it's all a fake story, isn't it, Jesse? Jessico, Stan. It's all a fake story. That's why the Asian stock market's down 10.8%, and they had to put a circuit breaker in place. Anyway, Asian chip market cracks. Korean Kospi fell 10%, over 10%, and halted trading as Samsung and SK Hynix led a punishing global memory sell-off. Nvidia underwrites its own customer, talks to guarantee $250 billion of OpenAI's data center debt, revived circular financing fears, and knocked 5% off Nvidia shares, actually coming up to 6% if you include pre-market today. That's the story we're going to dive into. We've got the Fed's hardest week. They've started their FOMC 2-day meeting. Tomorrow we'll get the outcome of that. Oil is heading lower. Apple is now the most valuable company. Boeing is, I think, reporting earnings this morning. And it's facing a big test there. Crypto is waiting on Kevin Walsh. Gold is going down before the before the FOMC decision tomorrow. We're going to come on to our deep dive of is the AI bubble popping, and then we've got a chart of the day of Nvidia for those premium members. So that's the week. That's the top stories. A quick look at what's coming up this week. What's coming up this week? Well, the three most important things. Again, you can go to the week ahead. You can bookmark this. This is your sort of economic calendar for the week. What's happening this week? The three most important events. Number one is the FOMC Fed rate decision. That's tomorrow at 2 p.m. Eastern Time, 7 p.m. UK time. Then on tomorrow after close, we've got big tech earnings, Microsoft and Meta tomorrow night. You can book those earnings in. You can do a $10 super chat and you can book those earnings in. Meta, Microsoft tomorrow, Apple and Amazon on Thursday. That's about $10 trillion sort of reporting earnings over the next couple of days. Thursday is a big one as well. We've got Bank of England rate decision. Then we've got the US GDP. Then we've got the June PCE, the inflation data, and then towards the night we've got the Japanese interest rate decision. So a big week ahead. So just a reminder of that. And as always, you can go check out the full details of that on the week ahead newsletter that gets published on Sunday. So what do we have next? Well, let's come on to our main story of the day, all about Nvidia. So we can scroll down to our deep dive. Remember, you get top movers, top losers, the top stories of the day. But we're going to go over to our deep dive, and we're going to turn it into a video as well. So if you're watching live, don't be confused. I am making this live, but I'm also going to make it into a video for people that have missed the show this morning. So bear with me. And then straight after this, we're going over to Martin for Coca-Cola. Martin said, I was right about Coca-Cola, huge win. CEO sold weeks ago. I'll be right about SpaceX. I told you the government bought it. Today, I prove it. Very interesting. We've got lots of stories coming from Martin as well throughout the day. Nick Jones, he's here at 3 a.m. He's here at 12 p.m., 12 a.m. Now he's here at 12:30 p.m. I love it. Nick Jones is always around. I don't think Nick Jones ever sleeps. He's in the chat. Okay, let's come on to our story. We're going to turn it into a video that will be covering these 3 points. Breaking news on Martin Lucas Investor. We're looking at Nvidia and OpenAI. The loop behind the chip crash. We've just got the Asian stock market drop 10%, circuit breakers halting. We've got Nvidia down 6%. We've got SK Hynix down below its IPO price here in the US, where they only debuted just a couple weeks ago. We've got all of that going on. Is this the start of the AI bubble crash? Well, let me tell you all about it in the next 15 minutes. I will try and tell you all everything that's going on with the loop, with the finance, with the $250 billion deal. Yeah, let's just get straight to it. We're going from our very own newsletter where we have done and put the research into it. Around and around we go. The Nvidia and OpenAI loop behind the chip crash. All of this is what we're going to cover in today's video. Chip shares fell across 3 continents today. Korea's main index dropped about 10.8%. That's the main index. That's as if they're equivalent of the S&P 500 dropping 10% in one day. And the exchange halted trading. Kioxia in Tokyo lost more than 18%. I've definitely butchered the name of that exchange, but that dropped 18% in Tokyo today. The memory names in New York also are opening about 5-6% lower. Nvidia currently down about 6%. The trigger was a report that Nvidia is in talks to guarantee up to $250 billion of borrowing. So a customer can build a data center and fill it with Nvidia chips. We're not claiming, no one serious is claiming that the AI demand is fake. We know AI is going to succeed. We know there's a lot of demand for AI. We know AI is the future. But the worry is, who is actually paying for it? Let's get into it. So what is this guarantee we're talking about? So OpenAI, arguably the biggest AI company. Well, you can argue whether it's Anthropic or OpenAI. They're both private companies, but arguably the biggest AI company in the world, the OpenAI, the one that creates ChatGPT, probably the most used AI model in the world, wants to borrow an enormous amount of money. They want to borrow money. They need money. Problem is, they lose money, and they've never made money, and they have no investment grade credit rating. So lenders won't allow them to borrow money. They will either charge them too much or completely refuse to lend them any money. What a guarantee does, it fixes it. So a guarantee fixes that. essentially Nvidia, the previous largest company in the world before Apple overtook it just yesterday. So Nvidia will promise that the lenders that if OpenAI cannot repay the debt, Nvidia will. Think of it as a mortgage. Think of it as a child buying a house. They don't have enough salary, so they ask their parents to be their guarantors. So essentially, if they can't pay the mortgage, the parents are the ones that have to deal with it. So that's what OpenAI is doing. OpenAI can't get the finance, so it's too expensive. They'll pay the interest payments, but if they ever default, Nvidia is the one that signed the document and saying we'll pay if they cannot repay. So the lenders are not judging OpenAI's balance sheet. They're not judging their ability to pay back. They're now judging Nvidia's ability, Nvidia's company, Nvidia's balance sheet, Nvidia's profits. So the debt is now cheaper because the risk has moved to a stronger company. That's what's going on here. But why is this making people uneasy? Well, follow the money round the circle. Nvidia will guarantee the debt. Lenders release the cash. The cash builds a 10 gigawatt campus in southern Ohio, developed by SB Energy, a SoftBank subsidiary, at a reported cost of above $500 billion. Then OpenAI will rent that computing power. The campus is now going to be filled with NVIDIA chips. Those orders come back to NVIDIA as revenue. So you can see what this cycle is. NVIDIA is guaranteeing the debt. The lenders, whoever is lending the money, will give OpenAI the cash. The cash is building the data center. The data center is costing $500 billion. OpenAI will be renting out the computing power. That's how they're going to generate money. What's in it for Nvidia is essentially it's going to just be full of Nvidia chips, and all the money is going to go to Nvidia via orders for the chips, and that's going to come back as revenue. So that's the loop, and this is presented in the graphic, and that's what people are worried about. Nvidia guarantees the borrowing, chips order book as revenue, as Nvidia revenue. OpenAI will rent it out. You can. I'll leave this graphic up. You can screenshot it or go straight back to the newsletter. But I think we've explained it. But if you want to see how this loop goes round and round, there it is. I was actually going the wrong way. So Nvidia to lenders to data center to OpenAI, and then it comes straight back to Nvidia. If one thing breaks within that cycle, that's worrying. So on top of all of that, Nvidia is in talks to finance as much as $300 billion of OpenAI's chip purchases. So here we go. You thought that was the end of it, but no, it's not. Nvidia is in talks to finance as much as $300 billion of OpenAI's chip purchases. So essentially, lending money to OpenAI to buy chips. So the seller is helping pay for the purchase of his own product. I'm just reading. If this is made during a live show, remember, guys, if we make these videos, we're making it during the live show. You can see the date and time at the top of the screen. I'm just going to refer back to live chat because we've got a few questions coming back. They're not lending. Jesse says they're not lending. One of them is a guarantee for the finance. Over here, we're talking about them actually financing $300 billion worth of OpenAI chip purchase. So they are in talks of lending. Yes, they are. And then Chris says, apologies, I'm confused. Is it a case of here a loan to build a data center? We don't mind lending as long as our name used within. So it's not as simple as they're just giving them money to build a data center. They are guaranteeing a debt from the lenders. The lenders are going to borrow. The lenders are going to give money to OpenAI. OpenAI doesn't have a good enough credit score. Put it that way. It doesn't have a good enough credit score, doesn't have a good enough balance sheet, isn't generating profit, so they can't get the loan on good terms, or they might not even be able to get the loan. So essentially, Nvidia is coming in as such a big company with lots of profits to say we're going to sign it. If they can't pay it back, we will pay it back. So Nvidia is taking on that guarantor position. OpenAI is going to get the money. OpenAI is going to build a data center. OpenAI is going to fill it with NVIDIA chips. That money, OpenAI will hopefully make money, or their plan is to make money by renting out the computing power. But essentially, because they're going to be buying lots of NVIDIA chips, that's how it helps with NVIDIA. But on top of that, they're actually looking Nvidia is in talks to finance $300 billion of OpenAI's chip purchases. So they're looking to finance their own chip purchases, which is the other story. So let's continue. So the seller helps pay for the purchase of its own product. Nvidia is helping pay for its own product. That's the cycle that we're in. So this has a name, and it's called vendor financing. And it is decades old. It went badly once. In the late 1990s, Lucent, Nortel, and Motorola lent telecom companies the money to buy their own equipment. Someone in the chat is saying they're not lending money. So anybody lending money? Someone in the chat, no, we're not. No, they're not giving them 300 billion. They're looking to finance them with $350 billion. So the seller, Nvidia, helps pay for the purchase of its own product. This has happened before with Motorola and Nortel in the 1990s, when the telecom companies gave money to buy their own equipment. The sales looked excellent for 3 years. Then the borrowers failed and the sales became write-offs. People clearly want AI computing, and that's not what we're saying here. They want AI computing, the demand is there. The open question is whether these particular orders would exist if the sellers were not arranging the money. And how big the promises have got. I will come over to the questions in a second. Let's just get through the story, and then I'll come over to the live Q&A. How big the promises have got. Bloomberg added up Nvidia's announced commitments across the AI ecosystem and reached roughly 750 billion. This is Bloomberg, the biggest news outlet for financial news, is coming and reporting this as roughly $750 billion, nearly $1 trillion of Nvidia's announced commitments across the AI ecosystem. Nvidia's revenue for its entire last financial year was massive. It was 200 billion, but it's nowhere near the 750 billion they've essentially got on the line. A record up 65%, with the 193 billion is from data centers. So they've got 750 billion in promises, 215 billion of annual sales, 3.5 years worth of annual sales they have essentially committed to the AI ecosystem. And you can see the difference there in our graphic there. So this is not a bill landing tomorrow. Most of it is staged across years and depending on whether things actually get built. It is still a large forward commitment for a company whose biggest customers do not even yet make a profit. And that's the bit that concerns people. These companies that they're lending money to, that they're partnering with, that they are looking to guarantee debts, they're not making money. They're losing money at massive levels. And this is not the only thing hitting the chips. It's not financing. Financing is not the only thing hitting the chip market. Memory shares have a second problem, and it has nothing to do with OpenAI. China has begun mass producing its own immersion lithography machines, the tools that print circuits onto silicon wafers, and which ASML has effectively owned. The volumes are small, around 5 units this year and around 20 next, going to SMIC, Huanghong, and Changxin Memory. Small volumes, loud signal. Memory is priced on expected supply 2 and 3 years ahead. So a working Chinese tool chain gets marked into today's share price long before a single chip exists. Remember, whenever you're looking at any market, whether it's AI chips, whether it's looking at AI chips or storage chips, or you're looking at copper build out and the copper needed for electrification, all of these countries, they've already stockpiled. They're ready for this year. They're ready for next year. But what we're pricing in is 2 years from now, 3 years from now, 4 years from now. And it looks like China is starting to mass produce these memory chips as well, which is bringing something like SanDisk down a long way. So if you look at how, I think SanDisk is down 50% this month. Again, you can see some of the losses. SK Hynix down 15%, Samsung Electronics down 13%, the Kospi Index down 10%, the Tokyo Kia Exco down 18% as well. Nvidia down 5% last session. Mount Hill Memory ETF down 7% in the last session. So you can see how quickly things are moving. The clearest measure of the mood. SK Hynix sold shares in New York on the 9th of July. We covered their debut, and they debuted at a record. This is a record for any foreign listed company coming over to the US at $26.5 billion, priced at $150. That's what it was priced at. Then it peaked. It didn't open at 150, it actually jumped above it. It peaked at $193. And just a few weeks later, we're now at $139 for SK Hynix. 17 days from a record listing is now at below the price it was sold. That's even worse than how SpaceX has done. Obviously, SpaceX is down more from its peak, but this is only in 17 days, and it's already below its IPO or debut price. So the question everyone's going to be asking is the AI bubble popping? Well, two things are true at the same time. Nvidia's demand is real, and its last financial year brought in record revenue. Nvidia, very strong, lowest PE, I think, out of the Mag 7. But also, the market has stopped taking the spending on trust, which is why companies asking to be funded are failing, while the ones producing cash are holding up. Look at how Apple's doing. A lot of people said a year ago, 2 years ago, 6 months ago, Apple has too much cash, they're not investing in AI enough. And look at them now, the most valuable company in the world. A bubble bursting looks like orders being cancelled. That's when you need to be worried. That has not happened yet. What has happened is the price of believing the story on its own has come down, and those two are different events. And the next 48 hours will settle a lot of it. We've got Microsoft and Meta reporting tomorrow evening, and Apple and Amazon the evening after. So that's what we need to listen into, because that will sort of give us a very good idea and will help answer the question, is the AI bubble popping? So what everyone's going to look at, which has been true for a long time, it's all about revenue. Is there going to be a revenue beat? How big is the revenue beat? Ignore it. Unless they don't beat on revenue or unless they don't beat on earnings, then it doesn't matter. That's not what we need to look out for. Alphabet last week beat on revenue. Their cloud sales jumped 82%, and the shares fell about 5% because it lifted its 2026 capital spending plan to as much as 205 billion. They increased their spending on AI, which you might think, great, they're investing. Investors don't want that anymore. Investors don't want them spending this much on AI anymore. So Intel reported the same night. It beat, and the shares jumped 12%. Well, because its spending has already turned into data center revenue, up 59%. So the market is not marking companies down for spending. It's not just if you're spending, you're going down. It is marking them down for spending without any proof of them making money from it. So the number to watch is the capital expenditure guide. That's what we're watching on the next 4 biggest earnings, essentially the biggest companies in the world reporting earnings over the next couple of days. Watch the capital expenditure guidance and how it's moved against its cloud growth. Microsoft had pointed to roughly 190 billion for 2026, and analysts already expect it nearer to 220 billion. Meta sits around 137 billion. Amazon's web services is seen growing about 33%. Good looks like the CapEx line has held steady or nudged up while cloud growth accelerates because the gap is closing. What would be bad, that looks like a jump in the budget with cloud growth flat. And Apple is the odd one out of the 4. It has spent far less on AI infrastructure than its rivals, so its results are a demand story about iPhones and services rather than a spending story. So Apple is a sort of an outlier, but it's worked out for them. So the last thing to listen for is how spending is being paid for. Money out of operating cash flow is a company backing itself. If it's coming out their operating cash flow, the company's paying for itself. They believe in themselves. They're getting the money from themselves. Money coming from debt, leases, and third-party structures is the same bet with someone else's balance sheet underneath it. Alphabet raised its budget and funded it from business that already generates the cash. Not everyone reporting this week will be in the position to use their own cash flows. So the two things I'm watching is whether the OpenAI arrangement is actually confirmed as reported or it comes back smaller. The figures in circulation come from talks that have not finished. What it costs Nvidia to borrow is something else I'm watching. If lenders begin treating those guarantees as real liabilities, it shows in Nvidia's credit spreads long before it shows in earnings. And again, that could be a problem for Nvidia because if they are taking on lots of guaranteed debt, or if they're guarantors of the debt, then maybe their credit rating falls. They won't be able to get a good funding, and maybe the shareholders won't want to continue holding the stock. And again, we will have a whole deep chart of the day is on Nvidia. We're looking at the chart. Essentially, below $200, we can head down to 3 targets that I might start personally laddering in: 189, 170, and even I think is around 180. Anyway, you can go and check it out in the chart of the day. So let me know your thoughts on the Nvidia story. I'll put a video up here and a video up here for you to watch. If you want to sign up to a newsletter, please do click over here, and you can get all the perks of the newsletter. Whether it's free, you can sign up for free, or go for the premium plan and check out our chart training course, our full deep dives, our charts of the day, our £5,000 portfolio challenge, one-on-one DMs, the 3 trading view indicators, all of that you get for premium. Again, whether you're free or you're paid, there's no ads, it's no sponsorship. So the link for that will be just here. It'll be a 25% discount and 2 videos up here for you. Leave a comment in the comment section down below. And until next time, as always, take care of yourselves and each other. Okay, so if you're watching me live, stay with me. We are about to go over to Coca-Cola earnings with Martin in just under a minute's time. So let me check this. Let's go over to the Q&A and Martin's live. We've only got about a minute, and then we'll go over there. Please do leave a like button. Like button. Please do leave a like on today's stream. Subscribe if you haven't done so already, and let's go over to some comments. Can I bring them up on the screen? Oh yeah, we do have a poll running. So let's go over here. We do have Chris just sent a GIF. Thank you very much. Yeah, we have a poll running. So if you want to vote in the poll, I'm about to end it in just a second. Let me just give you guys a minute and then I will end the poll as well. Has everyone voted? Is the AI bubble popping? Yes. Crash has started. No. Healthy. Correction. May not leave a like for you, Sensei. Sounds like a misinformation or explanation. Jessica, do you want to read the newsletter? Do you want to watch the video again? I hope I've explained everything to you. I don't understand what you mean. I'll come on to your questions in a second. Let me end the poll. Let's see what the results of the poll were. We are here we go. Is the AI bubble popping? Yes, crash has started. 40% of you are saying yes, the crash has started. I mean, if you look at Nvidia, we have already dropped from about 234, which was our target, by the way, to literally the percent. It's down 16%. So not as bad as on Nvidia. I mean, Nvidia, the PE ratio is actually quite good. If you look at something like SanDisk, that's when you can say maybe we've peaked. And I do believe we've peaked on these chip stocks. That doesn't mean we can't go higher. I just think we'll come into somewhere around the momentum band, which we are now. Maybe on these stories, again, these sometimes mark the bottom when everyone gets a bit too fearful. And then maybe we get a bounce in. Maybe we get a nice bounce and then a lower high. But I do think the peak is in. I don't think we're going to revisit these levels on SanDisk for maybe a couple years, actually, or a year, or potentially. Again, I've been bullish from throughout the whole SanDisk move up, all the way up. But when it turns, it puts in a peak, and then that's normally the peak you see for a while. Maybe we put in another lower high and then move lower over time. But anyway, it's time to end. Time to go to Google earnings. Next time we do this, we'll be live for the whole hour, but it's just because we've got Google earnings. So I'm going to go there now. I'm going to give you the link in the live chat. Martin's already posted there. So if you want to go there for the Google earnings, what have I missed? Yes, like Caterpillar does when you buy an excavator. No, they're not giving them 350 billion. You don't know what. So when you buy a Caterpillar excavator, Caterpillar is lending you the money to buy the excavator. So they're sending you a check for 700,000 to buy an excavator. No, I didn't say they're sending them a check. What? Firstly, there's two separate things. One is they being a guarantor of the debt. That's going to affect their own balance sheet to quite a large extent. And the second thing, if you go and look at our newsletter, maybe you need to go reread it. Nvidia is in talks to finance as much as 300 billion of OpenAI's chip purchases. So I've not said they're just handing them a blank check. That's not what's going on, but that's not the concern in the market. Did you please explain like every my Anyway, Jesse, I have to end the show. Hopefully, you'll be in our next show, and then I can explain it further for you. Or come into Discord, and I'll give you a voice note. Until next time, guys, thank you everyone for tuning in. Sorry it's been a short show. Sorry I can answer everyone's questions. I will answer them in our next live show. We always go through all the Q&A, but just because we've got the Coca-Cola earnings, we'll have to end this early. As always, thank you everyone for tuning in. Stay where you are. You'll go over to Martin, who's live with the Coca-Cola earnings. Until next time, as always, take care of yourselves and each other. Bye-bye.